2X. This is UCO. This is one of our top 10 stocks that's super popular right now. And this isn't actually a stock though, this is an ETF, but this is the ProShares Ultra Bloomberg Crude. So this is a 2X tracking ETF of the Bloomberg Crude Index. And this thing started back in 2009 when crude prices were crazy, $27,000 a share. And now it's here. So let's click the auto. All right, let's have a look at this thing and figure out what's going on. So the crude prices have been coming down for a little while. And where's our crash? Here. Okay, so and then the S&P did a dead cat. It did a bounce, and then it did the 1, 2, 3, 4, 5. Not that far. Oh, come on. Come on, don't do it to me. I'm trying to draw stuff. All right. Here, Feb 20. Okay, so we get the 1, 2, 3 wave down on the S&P. Then we get the 1, 2, 3, 4, 5 wave up on the S&P. And crude is doing these rough movements along with the S&P, which is interesting, but obviously it collapsed. And then we got the Contango. And what are the prices now? Okay, so this is a 2X. So I mean, crude, like the actual crude prices must be about $8 or something. And just checking out the oil futures and all the crude things that I've been hearing is that we have about a month or two of crude prices increasing, and then we have about 6 months of them decreasing again. So it's just based on that kind of outlook, the futures outlook, listening to the oil tanker interviews, S&P Global Platts, oilprice.com. There's all kinds of places where you can get an outlook on the future, on the storage, the futures contracts, the prices, and it looks like the prices are going to be going up, but I don't think they're going to be going up to crazy numbers. I think they're going to go up a little bit. Okay. Here. Yeah, I think it's more like this kind of shape. And the prices, I think the prices around October are still higher than they are now. Let me draw a little bit better curve than this and draw the Contango. So it should be up for a month and a half-ish, and then it's just trending down towards the end of the year, but not as low as it is now. And we have our max oil shortage problem in this window here, almost out to September. Actually, well, let me look at the actual dates on this thing when I'm drawing it. Oh yeah, okay. Let me draw it. Let me give this a third attempt here, because the end of the year is a lot farther out than that. So here we are, and it should be up through June and kind of peaking around here in July, and then it starts heading down out towards the end of the year. And we've seen like with Jeff Snyder, he's been talking about this a lot, and it looks like we can predict this out towards October-ish right now, and we should get a peak price here, and the peak Contango is from that crash back here, where the current spot contracts are lower than futures to the max extent here. So the Contango should be decreasing until we get to a point where we're kind of even looking forward. The undo button undoes my scale instead of my line. Okay, that's the last time I hit the undo button. Okay, so that's the Contango where your spot is lower than your futures. And the reason that this Contango sent the oil contracts to -40 was because It's a long squeeze where those contracts are expiring and people are just waiting to try to get a higher price before the end of the contract, but it just kept going down, and then they had to just fire sale their contracts because the people speculating on the oil contracts were holding contracts that required a physical delivery of barrels of oil, and these speculating people have no way of taking an actual oil delivery for whatever amount of oil they have a contract for. So they had to just dump all their contracts in this contango situation, and that should be the last time that it goes to a crazy negative right now. I mean, it's possible it does that again later, but that was the big long squeeze. People holding physical oil contracts with the contango where the futures were higher. So this looks good for crude. Sorry, I should have gotten to this a little a little sooner. This is Brian Lewis with MMT Investing, and the undo button hates me, and contango is still happening, but oil prices look to be going up, and it gets a little bit trickier than just oil prices look to be going up, though. And I want to go back and look at this credit contraction cycle and how it's actually affecting these oil swings and when to actually buy the oil, even if it's a long term up. There might be a sort of a best point of entry here, and the crude oil always smashes that like button right now to help me out with the YouTube algorithm. And this is not trading advice. And here's the idea is that we get these swings in the general S&P, and this is not just the S&P just acting crazy. This is a worldwide monetary system contraction. It's a credit contraction cycle. And this is a 3-month-ish credit contraction cycle out here to here, and we're going to be getting these crazy swings through this whole cycle. And crude is getting affected by this just like everything else is. And you can see crude swings up when the credit goes up and the S&P goes up. And you can see this shape, it goes up and it's crashing while this 5 wave is going on. But if we get a wave down here, I don't know. I mean, so far the oil prices have, and the oil ETF has been doing a general up while this has been going down. But I do think it is concerning to try to go long on something that is getting pulled down with other things. So I just think this is kind of a tricky one. It's really tricky because the credit contraction cycle might want to pull this thing down, but it seems like this is probably a low on actual crude prices. So I don't know. I don't know if it's going to get this kind of choppy movement that we're seeing here, and then trend up. I think it's going to be tricky to trade this thing over the next couple weeks and when the best time to get in. So yeah, sorry that's not probably as helpful as you were hoping. This does look like a good long just for the 2-month time horizon though, and a tricky one to trade right now. And not, I mean, the 2x. Oh yeah, there's a couple other things to mention. Okay, so this is a 2x levered ETF. It does have oil backing it, so it's like a fun ETF. But the thing with the levered ETF when you're going long on it is that you lose percentages every time that there's volatility. So I don't know. I don't know if that's going to be too big of a deal on this one because it looks like it's pretty flat. Let's get in here a little tighter and see what the actual volatility looks like. So when you're getting volatile swings and things, and you have a levered ETF, every time you get a down move, there's just like an extra couple percentages of down movement below the bottom when you have a levered fund, just because of the compounding math. And every time you do one of these, you lose a little bit, you lose a little bit. And if you're going sideways with volatility, you're just losing money every time you switch, you're losing money. So we had a period there on the bull market where it's low volatility and it was going up, and levered ETFs looked really good because those are kind of optimal conditions for that kind of a fund. But when you have a bear market and you have volatility, the levered ETFs have a bunch of risk. I mean, you have counterparty risk with pro shares, and you have this compounding risk here with the volatility, and then you also have the kind of contango problems that you can get in because of the way that futures are built into these things. So I generally don't like the levered ETFs as a long position, especially for longer than like a day or two, because if you're holding this thing for the next 2 months to try to get this swing up in the oil price, there's just a lot of risk. There's a lot of risk, and I guess that could be a pretty good up if you go from what I don't know the number that this would get up to. I think it could get up here around here really, in this kind of range, but it's just there's risk in this thing that people don't really take into account for the most part, and there's a bunch of risk in this cycle right now too. This is a really dangerous and tricky cycle to be trading in, and that's the idea, I guess, with the crude. And then my friend Mo is sending me a whole list of these kind of oil and energy stocks that he's asking me about, and it's FXN, UGA, IEO, XOP, the BNO, PXI. He had a whole list, and he's like, these things are looking really good. They're going up. And I was saying pretty much the same thing to him, that this cycle is really tricky. And yeah, like energy's down, so it looks like a good value investment right now, but I don't think the cycle is down yet. I mean, I think we're halfway, a little over halfway through this cycle, and there's plenty of risk and downside. It's not like this thing. Well, I mean, the crude oil prices. I mean, how low can they actually go? I mean, this is real crude prices. It's not like the. Yeah, I don't know. I think this one actually might be at a floor back here. I guess it's possible to go lower. And if you're looking at this on a percentage basis, I guess a tiny swing down is a big percentage, though. I mean, right? If you're at 16 and it does a swing down to 8, like that looks really tiny here, but that's half. So I think the downside risk on this is underestimated, I guess, is what I'm getting at. And I think the downside risk on all those energy stocks that I just was talking about and all those ETFs is similar. There's a lot of risk here, and I don't think this is a value floor exactly in the short term. But I do think that this thing will get out here, especially as we get out of this cycle. We'll get up, and I really don't know the entry points. Like I mean, looking at the S&P and the cycle and trying to figure out the up moves for like gold and oil tankers is a little more straightforward, but this thing is kind of rising against the cycle. Yeah. Okay. That's about as good as I can do on this one, guys. This is a really, really tricky one. Um, it's interesting. I think there is a lot of upside, and I don't know if I personally like it or not because it's just so complicated and tricky and risky. So maybe, yeah, and you have to go long on a levered one for a long period. I really don't like the idea of going long levered in volatile markets for this kind of time period. I don't like this one. I don't like it. I don't like it. I think there's better ways to do this idea, this kind of going long on the crude. Um, but UCO is too risky for me right here. And please hit the like button. That's not trading advice. That's all I can do on this one, guys. That's all I can do for you. Uh, Happy trading.